Hello and welcome to the next video in our series of Basic Law for Business. And today we're going to be looking at banking law. There are two main sides of banking law. Firstly, the laws the government uses to control what the banks are allowed to do. And secondly, laws about the contract between the bank and the customer. So why does the government want to control what banks do more than they do for other industries? And the reason is because when banks make loans, it can cause inflation. Inflation is when the prices of lots of things go up. How does that work? One of the big causes of inflation is the government prints too much money. This is why the chat buys less and less every year, because the government prints a lot of money. So for example, imagine a situation where there was only one thing for sale, chocolate bars. Last year there were 100 chocolate bars for sale, and the government printed 500 chat of banknotes. So every chocolate bar would cost 5 chat, 500 divided by 100. This year, the government prints 100 more chat, so now there are 600 chat. There are still only 100 chocolate bars. Every chocolate bar will cost 6 chat, 600 divided by 100. If we look at supply and demand, supply, the 100 chocolate bars, stays the same. But demand, the amount of money people have to spend, goes up to 600 chat, so the price goes up. What's this got to do with banking? Well, when banks give someone a loan, the effect is the same as printing more money. If there are 100 chocolate bars and 500 chat, the price will be 5 chat each. If the bank lends someone 100 chat, the amount of money people can spend on chocolate bars goes up to 600 chat, and the price will go up to 6. If the government wants to control inflation, and they all do, they have to control how much the banks can lend. When banks give someone a loan, the effect is the same as printing more money. And the main way they control how much banks lend is not about the law. They use market forces. They make the interest rates higher. That means it's more expensive to borrow money. If interest rates go up, some people will decide it's too expensive. They will not borrow, and so the banks lend less because demand for the loan goes down. Sometimes they tell the banks, this year you can only lend 105% of the amount you loaned last year. So if bank made loans of 100 million baht last year, they can only lend 105 million this year. They might also control the ratio between how much the customer has to pay the bank every year and the customer's salary. They might say the salary has to be at least 3 times the loan repayments. So if your salary is 100,000 baht per year, your loan repayments can't be more than 33,333 baht per year. If they would be more, the bank is not allowed to lend you the money. Another way they use is to control the percentage that banks can lend of the things they're buying. Let's say you're buying a car for 100,000 baht. The government might tell banks you can only lend 60%. That would mean you can only borrow 60,000 baht, and you would have to save 40,000 baht before you could buy your car. At the beginning, I said there are also laws about the contract between the bank and the customer. These laws are not about controlling how much the bank can lend. They are also not only for banks, but for anyone who lends money. This is important because in poor communities, there are often other people, not banks, who will lend money. These people often are very bad for the borrowers. They charge very high interest rates. They try to make sure the borrowers never repay the money. They want them to keep paying the high interest rates forever. If the borrowers repay the money, they don't get their high interest rates anymore. They are often called loan sharks because, like sharks, they live off the people in their community. People who borrow from them are often desperate. They're not dumb. They don't like borrowing from these guys, but they have no alternative. The government and the community don't like these people. They hurt people in the community and stop them from improving their situation. They will make it illegal to lend above, for example, 20% per year interest rate. This is not a problem for the banks. Their interest rates are not as high as 20% anyway. But it means that if the bad guys lend for more than 20%, they will be breaking the law. Many times, they don't care about that. They think the poor people who borrow from them don't know about the law. Even if they do, they might borrow anyway because they're desperate. And if they get in trouble, the lender will pay somebody because of corruption to make the problem go away. The government makes rules for all lenders to make sure that everyone understands their situation. For example, there must be a written contract, which is called a loan agreement. And it must say what the interest rate is and if it will always stay the same or if it can change. If it can change, what will happen? For example, the loan repayments could increase and the loan end date stays the same. Or the loan repayments stay the same, but the loan end date becomes later. Also, how the lender will tell the borrower about the change so that they know what is happening. The loan agreement must have details about when the payments must be made and how. Often the lender must tell the borrower the total amount of interest over the whole period of the loan. The aim is that the lender and the borrower are 100% clear about what they've agreed to. The government also tries to protect borrowers from agreeing to loans that they might have a problem repaying. For example, the government might have a law that they cannot agree a loan for more than 100% of what is being bought. Let's look again at a car that is bought for 100,000 baht. Let's say the car is in Bangkok and it will cost 5,000 baht to get it to Poprah. If the borrower is rich, the bank might be happy to lend him 105,000. If the law says that they can't lend more than 100% of the thing that is bought, they can't do that. Because the thing that is bought costs only 100,000 baht, that is the most he can borrow. This is the end, my friend. See you again next time.